Hello everyone, welcome to the Ichimoku Charts.com daily analysis for the S&P 500 for Monday, February 25th, 2013. We're a very large black body candle today, a candle that's made a higher high but a lower low and therefore doesn't technically change the trend today. The previous trend was up. We had a bullish candle that made a higher high and a higher low, and early on in trading today the market went on with that uptrend, tested up to the resistance at 1523, an area that we've highlighted previously, and found the buyers losing commitment up around that area, and then the market substantially selling off with a very large black body candle that's closed down below the candles of the previous two trading days, and also significantly closed in a substantial way down below the 1500 round number level of support. A very solid close down below there with the sellers in control and showing very strong commitment to taking this market lower. We have had the market close down below there previously, but this is a very large black body candle, and a candle, as I've already mentioned, where the sellers have taken control of this market in a very significant way. The market has also closed down below the Tenkan-sen, and that may be very important. It means that the market is now in a downtrend in the medium-term time frame, and it has been some time since we've seen the market close down below the Kijun-sen, and that was around here. But at that stage, when the market closed down below the Kijun-sen, we had very strong support just below that area at 1400, and from within the cloud. We don't have any support until this market trades down to around 1475, and then down to the cloud at roughly around 1450. So this market could trade substantially lower before it finds any support. Now there is a very strong possibility that we have seen a head and shoulders pattern completed here. And I mention a possibility, and that's because here technically we don't actually have a peak yet at this point here, because we have the market still in an uptrend technically. So we're looking for a lower high and a lower low to confirm a change of trend to the downside, to confirm that as a peak. The trouble is, if we're waiting for that to occur, we have already seen the breakout below the neckline, and it will probably be too late. And this market, because of the solid downside momentum, it is likely to meet the target fairly quickly if we do see the sellers continuing that momentum to the downside. But let's just consider this as being the right shoulder, and here we have the left shoulder. It's a complex left shoulder here, and we have the peak of the left shoulder here. We have the head, and here's the peak of the head, and the right shoulder are closed down below the neckline. Our target is the distance from the top of the head to the neckline projected down from the breakout, and that gives us a target down around this 1460 area, coinciding with this minor support level down around this 1456 area roughly, in between these two minor levels, and very close to where the cloud is trading at the moment. So that will highlight that area as a potential area of support for this market. Now in terms of Fibonacci, we're looking at the Fibonacci extension, and we're examining the relationship of the current first time frame down uptrend. And remember, the market is still technically in an uptrend, so we're looking at how the market reacts and its relationship to that previous time the market was trending up. Sorry, I just put the wrong extension up. Here's the correct one. We're looking at the relationship of this current first time frame uptrend to the previous time the market was trending up. And here we've seen the market today test almost exactly to the 161.8% level and be strongly rejected from there in a very major way, as we've seen today, with the sellers closing with very strong control. So basically this market is set up for a strong change of trend to the downside, and this relationship with the Fibonacci ratio actually confirms the potential for that to happen. In terms of the Fibonacci retracement, and today we've seen the market retrace all the way up through the 61.8% level into the 78.6% level and be very strongly rejected from there in a major way, and it does suggest that we are going to see a change of trend. Now in terms of Ichimoku, as I've already mentioned, bearish market in the medium-term time frame. We're also bearish in the short-term time frame by trading below the Tenkan-sen, so below both the Kijun-sen and the Tenkan-sen, but remaining bullish in the long-term time frame by trading up above the cloud. But as I've mentioned previously, the market was looking very overextended. We were trading a long way away from those indicators, and as always, markets don't always trend, they correct, and usually with our Ichimoku indicators, because they represent equilibrium, the markets will retrace back towards those equilibrium indicators, the Ichimoku indicators, and find equilibrium around those levels. So we did see the market 2 trading periods ago find equilibrium there, try to bounce off the Kijun-sen and just close above the Tenkan-sen, but find resistance up at the 1523 level to close down below. Obviously very, very strong support at the top of the cloud, as I've mentioned, coinciding with this area around the 1457 level, and this is a dynamic area of support for this market, and the support will actually move up to meet the market as we move further and further into the trading week and the trading month. So that level of support will become higher and higher if this market doesn't sell off rapidly. As I've already mentioned, there is a possibility of this market selling off at least down to this 1474 level. The sellers are tightly in control and very strongly committed. If the market does attempt to rally, we will now have strong resistance around the 1500 level, and then above there all the way through to 1523.